Well, let's get across what to expect on this Friday session. And Jonathan Takadina from MPC Markets joins me now. Jonathan, further momentum propelling U.S. markets to record highs, S&P 500 and the NASDAQ. What gives?
What gives? I think I'm going to give you a soundbite straight away, and that the stock market is not the economy. So yesterday we had higher unemployment, and obviously the economy is screaming for rate cuts from the RBA. The stock market took that as, hey, cheaper funding, cheaper cost of borrowing coming up. Let's buy the market. And so we have two wildly opposing views. Obviously, the stock market's all at new highs. S&P's at record highs. The SPY is indicating that the XJO will probably print a new high today. And what we've seen is that generally we have strong finishes to the end of the week. So for us chartists, it's all steam ahead. Momentum is definitely to the upside.
Yeah, so Momo helping to drive this market, but also when it comes to the United States, U.S. earnings. Now, what are we expecting overall from earnings? Because Abbott Laboratories was one that did tank after pointing to tariffs, reduced COVID testing. But, like Netflix did well, United Airlines did well. It certainly seems as if demand hasn't fallen off a cliff in the U.S. economy.
Yeah, it certainly has. And then don't forget the retail sales number was actually good as well. So that actually drove more momentum. But I think the key that you have to look at is actually the financial sector, or anything that's involved in the financial sector. They're all on a tear. So I obviously have a look at the whole space. Even though JP Morgan disappointed, Citigroup was at record highs as well. And what we've seen is that trading volumes and actually just the amount of commerce within the financial sector is all at records. And you see exchanges at record highs. All of the brokers are at record highs. All of the banks are at record highs. And we're starting to see signs of life within the property sector over there as well. So basically, anything that's financialized is doing really well at the moment, stock market-wise and stock price-wise.
Yeah, and the financial sector led our market higher yesterday as well. So do you anticipate we'll see a repeat of that today?
Yeah, absolutely. I mean, Wednesday we had a little bit of a shakeout. We saw a slight pullback, but I think that's the first time we've had one in a few weeks, and then straight away the next day we're at record highs. So I think we're going to break out some new highs, and obviously the banks have to be a big part of that. But we do have BHP earnings that just came out early today. I saw that they've got record copper production, record iron ore production. And I think Mark was just saying that we've got record iron ore prices, record uranium prices, record copper prices, but BHP only up, say, 4%. So we'll see if BHP finally becomes one of the cool clubs, cool members of the club, and rises up. But generally, it's still a great company, extremely cheap, and that's why the value guys love it.
Yep. Well, that's a production report coming from BHP, so we'll digest that as the market opens and the market reaction. We'll digest some broker moves coming through for Car Group, for Santos, 29Metals in the wake of their updates yesterday. Reporting season, earnings season here in August. When you guys are having your morning meeting, talking around the water cooler, Jonathan, what are your expectations?
My expectations, I was reading a few analysts, and looks like overall, just the profitability of the corporate sector is actually just going to be flat. So what we're going to see is that it's going to be a very, very mixed market. So it's all about picking out, and I remember being on the call and talking about those earnings upgrades and earnings downgrades, and I think we'll see more of that. So basically, just stick with the companies that have a good track record in beating and have beat recently. And I think they'll be rewarded well. But then anyone that's disappointed and continues to disappoint during this earnings season, I think we'll see more downgrades there. So I think it's basically the haves and the have-nots. The guys that have been doing well will continue to do well, and the guys that are struggling will probably be punished by the market. So it's going to be a tale of two cities there in the markets during earnings season.
All right. Today, there's no big economic data on the horizon after yesterday's jobs report. Really looks to firm up expectations for an interest rate cut the next time the RBA meets. Look, as far as what you're expecting heading into the weekend? Is it still to see headlines dictating what the sentiment is around tariffs and trade, the U.S. Fed chair? Just trying to get a sense of what you think might drive U.S. markets tonight, or does it pretty much just come down to this FOMO, this MOMO trade?
Well, as I mentioned, I think if you just look at the plumbing, the financial sector, they're all really doing well. So I think they're just going to drive this market high. If you have a look at actual fund inflows, have a look at Hub24, read all the reports from Global X, all the ETF providers. We're just seeing record inflows into the market. That money has to go somewhere. It just means it just drives the stock market higher. The fundamental guys, where they're trying to value it, saying that this is quite expensive. Well, unfortunately, it's a case of, it doesn't make fundamental sense, but the money flow is just going to continue pushing this market higher. So, I'm quite bullish at this stage, and no stopping this train at the moment.